Well, Uday Kotak is the premier banker in the country. And when he talks, not only us analysts, but even markets tend to listen. So when he spoke about a few range of topics in the Kotak Securities conference yesterday, I thought I'll try and sum that up. Uh, the first piece that he spoke about is that the last 3 years have been quite challenging for the economic environment in the country in general. What he tries to suggest is that the cycles, especially in terms of lending rates as well as deposit rates, have been extremely fast. We did see that during COVID, we saw most central banks cut rates, including the RBI cutting the repo to 4%. And now with inflation coming back, they've raised rates fairly quickly from 4 to almost 6.5% now is where the RBI repo rate is currently at. So what he means to say is that the cycles are extremely fast, which is what is really making the environment challenging. What he also is suggesting is that there could be now a risk of an extended rate hiking cycle, or at least maintaining rates at elevated levels, which could dampen both valuations in terms of multiple asset classes outside of bonds. And of course, the other piece is it could hamper growth going forward. It could impact borrowing capabilities going forward. He also suggests that another 1% hike going forward could mean loan rates could reach 10%, which, if it does happen, which the India home loan rates cross the 10% threshold, he believes that there could be an accentuated risk going forward. But that seems unlikely, at least at the outset. Also, he said that India has emerged over the last 3 years as one of the stronger nations in the world, both on the geopolitics side as well as on the economic front. He also suggests that buying fuel from Russia after the geopolitical situation and the manner in which the geopolitical situation was handled was commendable, and that enabled India to buy fuel from Russia at discounted rates, and therefore India has actually benefited and been one of the few beneficiaries from this particular geopolitical situation of sorts, as I would call it. Thirdly, he says that it's important for India going forward to try and push down the current account deficit. That he believes is going to be of prime importance, and the manner in which then currency evolves will have to be seen. In terms of growth, he says that the high growth period for India is behind us. FY24, he expects around a 6% growth for India, and he believes that going forward, it will be in and around that range. Further, in terms of the current economic situation, he says that signs that consumption is actually slowing down, especially in the discretionary spend space, is quite visible. And that's something which may be concerning even for the Indian economy as well as for many companies in that space. Moving quickly forward, he says that the positive of the budget, the big positive rather of the budget, is the focus on capex that the budget has put. He says that this will of course encourage and drive growth going forward, as well as aid the private capex cycle, which still hasn't picked up in a very meaningful fashion. Lastly, he talks about credit growth. Now he says that credit growth will be, and this is in the banking sector, that's the last piece of it. He says credit growth is going to be extremely robust going forward. He believes that 1.5x of nominal GDP growth, which is 11% nominal GDP growth, he says credit growth ought to grow at 1.5x of that for large, well-capitalized banks. So what he's intending to say is that a mid-teens growth should be no problem, no challenge at all in the normal for well-capitalized, good, well-run banks at all. And he believes though that NIMs, of course, that is the main concern at the moment, because as deposit rates go up, NIMs, which is net interest margins, will start coming under pressure. He believes that NIMs may have peaked out, but at the same time, it may still be possible to maintain this level of margin. It can be managed, as he calls it. He says margins can be managed going forward. Of course, Kotak specifically, he highlighted that they are focusing on MSME. They want that MSME loan, their MSME loan mix, which is currently at 9%, goes up to 15%. They've made acquisitions to that regard as well. And of course, MSME means that they will be lending at higher interest rates to that particular component of loan book, which means that margins should not be much of a challenge, is what Uday Kotak says. These are the large takeaways of what he spoke about at the conference yesterday.
If you like this video, then like, share and subscribe to ET Now.